Inviting me. I'm going to be running through setups we have at the start of the week, talk a little bit about the U.S. political situation, talk about some data that we have coming out this week, and then go from there. So, if you would be so kind, please take a moment to look over the risk disclaimer, which should now be on your screen. If you are watching the recording, please take a moment to pause the recording and read the risk disclaimer carefully, and we'll get started. All right, so we're going to start here with Aussie dollar. We just opened on the market again. I pushed the webinar back till 5 because again we're going to see gaps because again the U.S. failed to come to any sort of resolution on the debt crisis or the budget impasse. So here's what we have on Aussie dollar. A very nice down gap here. Opened up at right around 94.25. We are near here trendline support. We're also sitting right on top of the 50-period EMA. Again, this is a 4-hour chart. All right, so as long as this support area hold we're in right now, look for a move up towards the top of the range, just above 95 at 95.30 or so. A move here below 94 should open up a move down towards 93.20, and then the bottom of the range, which sits just at 92.80 or so. All right, eventually, the bigger trade is going to be playing a breakout of this range, whenever that may come, whatever direction it may come in. But basically looking to play a break between, or basically looking to play a range between this high here and these lows down here. Again, this low corresponds well with an open gap that we've still defended, so we do have that to consider as well. So that's something to watch here at the start of the week. Let's take a look and see how E-mini futures are doing. E-mini's opening higher for God even knows what reason at this point. E-mini's up a point basically, so opening essentially flat, despite the fact that we failed to come to a resolution over the weekend, I think as many really expected us to. Next major support or resistance level is around 1720 on E-minis. Obviously significant bullish momentum, bullish engulfing pattern here with decent follow through. Too much of this trade, though, is going to be dependent on the U.S. political situation, so I would be wary about how you trade. Certainly pullbacks down here towards the 4-hour moving average cluster, about 1680. All right, we have the 5100 and 200 all right here. I would watch out for a bounce in that area, and then, of course, jump back up to the daily chart. All right, you see the overall pattern here. This top of the wedge here, about 1720, is the next major resistance level. Look for another pullback lower there. As far as the downside goes, that 100-day EMA here in green held very well. That is the level that bears have to try to break next. First, they have to get back about 50 points to even test that level, but that's the next major area to keep an eye on for buying interest. Jason, I'm in a Starbucks, so they are listening to classical music, so that's the background noise. Apologies for that. Vin, Aussie Yen, let's go there next. Might as well. Another gap lower. All right, so it looks like Aussie pairs hit to start the week. Yeah, this actually is a pretty nice area here on Aussie. All right, we gap down right into this trend line. I like buying gaps, lower gaps, gaps lower, just like I like selling gaps higher. So keep your eye on this trend line here. Below 92.50 and things start to look a little shaky for bulls. But in general, this pair looks fairly constructive. We go out to the daily chart. Get rid of these lines and sort of redraw them a little bit. All right, the first thing we have to note is this ascending trend line here. All right, that's the first level of support. Then the major level of support, in my opinion, still this descending trend line. So long as we're there, all right, the pair looks pretty bullish. We'll see how we manage to hold up here. But we are trading a breakout from this consolidation. All right, it was an ugly breakout, but it's starting to accelerate higher. 94, obviously the next major resistance. You can see this nice reversal of pairing here the last time we got up to 94, so keep your eye on that level. Of course, Aussie Yen is going to be heavily dependent on Dollar Yen. Dollar Yen opened, it looks like, a little bit lower today. Up to the 4-hour chart. Yep, slight dip here on Dollar Yen. Again, another breakout, still looks bullish. We're now sitting right around this 200-period EMA on the 4-hour chart. This the lines that I have drawn still relevant to me. I still think that's eventually what we're doing. We're going to march up to tag 100, retrace a little bit, and then break through 100 and head towards new highs. So the strategy for me right now is to sit and wait for this pullback and then look for buying opportunities here. If we do get a nice retracement here on dollar yen, we haven't retested this breakout. So if we do get a dip down towards like 97.35, I will be an eager buyer of that. I don't know if we will. We might, depending on how this U.S. political situation sort of wraps up. But I would be watching for that dip. But if we don't get that dip, then I'll be looking basically in the 98.60, 98.50, 98.40 at the lowest area for possible dollar yen longs for an eventual break of 100. All right, so that's that. Let's flip to pound dollar. Pound dollar opening what looks to be, well, turning red right now. We'll see in a second exactly what we're at. Let's talk a little bit about the U.S. political situation. I'm sure all of you are aware, at least to a certain extent, what's going on. We are, in the United States, I say we, I am an American, dealing with a political crisis where the Republicans and Democrats can't agree to raise the debt ceiling, which would allow the Treasury to borrow money needed to pay off debts and fund various, government activities. As long as that continues to be the case, the threat of U.S. default is very real. The deadline set by the Treasury Secretary is Thursday of this week, so we are starting to run out of time. The other half of that is the budget crisis. The U.S. government is shut down, or at least the non-essential parts of it, because we haven't been able to agree on a budget for this next upcoming fiscal year. Republicans and Democrats have restarted negotiations. We had several plans floated over the weekend, and a couple attracted bipartisan support, but so far none could get to a vote, and we haven't seen any real signs of progress other than the fact that we do have communication. So markets were really happy about the potential for a deal here on E-minis this day and this day. The fact that no deal has yet materialized and we're really not that much closer apparently has not phased equity markets at all. That would make me a little bit worried as an equity bull. It seems that we've agreed that there's going to be a deal, and while I think that the odds are very, very good that we will have a deal by Thursday, if we don't, I think markets are going to be stunned and we'll see some serious selling in U.S. equity markets. So that's your long shot trade, is if we don't get a U.S. political deal, watch out below on U.S. equities. But like I said, I do think we will see one sooner rather than later. Probably Monday is a holiday here in the States. Equity markets will be open, bond markets are closed. I suspect Tuesday we will start to see some real signs that we're about to have a deal to at least raise the debt ceiling and avoid the default. So we'll see how that plays out, but that's what's going on here, and that's why markets, you can expect them to remain a little bit unsettled for the time being. This is euro dollar. Okay, starting to chop sideways here. It is not very challenging, actually, now that I look at this chart, to get a head and shoulders pattern out of here. Okay, left head, now we are forming a right shoulder. That would put the neckline somewhere basically like this, so below 135, and we could start to see some serious selling on euro. Until that point, I'm not really aggressively bearish euro, but if we do break 135, I'll start to get that way. It's possible that the US is lagging the pound. You can see if we go back to the pound dollar put in head and shoulders that we broke down from last week. So if the euro is about a week behind, we could see a pretty serious breakdown in euro dollar this week. That would correspond nicely if we do see dollar buying on the fact that a deal gets accomplished. That would probably be likely dollar bullish, or at least in the initial reports, and then perhaps dollar bearish as risk-on sentiment kicks in, but could spark a breakdown in euro dollar. So I would keep an eye on that neckline. Other than that, I don't see a lot of tradable scenarios in euro dollar. It's pretty unpleasant up here, starting to chop, but keep an eye on the head and shoulders in 135. Could be a very nice trade this week. Let's take a look at Kiwi dollar. Alright, so Kiwi is actually nearing a very nice support area right now. We broke out of this descending trend line. We're now retesting 83. That's actually a very nice area to take a long. on Kiwi dollar, move above 83.50 in the breakout of this range. So I'd definitely be looking at that here early in the week. Spreads are probably a little elevated still because we're only 15 minutes after the open, but if we get to about 5:45, 6 o'clock my time, so half hour, 45 minutes, and we're still sitting in this area on Kiwi dollar above that retest of that trend line and that 50-period EMA on the 4-hour chart, that would be a very tempting buy for me. Euro Aussie likely gaps pretty solidly higher this week. Here's another here's another euro pair with a pretty clear reversal scenario. All right, we had a double top back here. First top came in July, second top came in late August, early September. And that double top forms the head of a head and shoulders. The neckline here is about 142.20 or so. All right, below that level, and we could start to see a serious breakdown in Euro Aussie. All right, that would match that breakdown in Euro dollar. Euro pound. Okay, Euro pound. Very nice buying opportunity here on this retest of the range and trend line that I missed. We got a pretty nasty 4-hour candle on Friday. If we do see a move back down towards this horizontal support, I'd probably be willing to give it a buy for a move up towards 85.60, but we'll have to see if we do get that move back down there. A lot of that will depend on how pound dollar trades, obviously. Yeah, pound dollar still, in my opinion, remains a threat for a continued breakdown. Click back there real quick. All right, so we broke this head and shoulders. Right now we're sitting just above the 200-period EMA here on the 4-hour chart. Kind of consolidating, in my opinion, after the head and shoulders break, and I do expect this 159 level to give. 158 would be a good first target. 157 is major support in a place where probably we'll start to see pound buy and kick back in. With all of that said, we have a ton of significant data coming out of the UK this week. We have UK employment, we have UK CPI numbers, we have manufacturing production. There's at least one or two other ones that I'm missing. All right, so we do have a lot of pound data that I think will really dictate how pound dollar trades. So watch for all of that this week, especially that employment data. It's been very significant. Oh, retail sales is another one. That causes a ton of volatility, far more volatility than you would expect from retail sales. So that's another one to sort of keep your eye on as well. That's Thursday morning, I think. So the pound very busy this week. The other pair that's going to be very busy is going to be the Aussie. We already looked at Aussie dollar and Aussie yen, so I'm going to click to pound Aussie, which is likely to be the busiest pair that you can get this week. We have the monetary policy minutes from the RBA. We have Chinese CPI and then Chinese GDP as well. The Chinese GDP is obviously going to be hugely significant to the Aussie. And if we actually have Chinese CPI tonight. That's in a few hours. All right, so if we get that kicked off with a bang, we could start to see a major reversal on pound Aussie. All right, very similar to Euro Aussie in that we have a clear reversal potential. 168 is major support. If we gap, it's pretty solidly higher. But if we do see a move behind the 168, we could start to see the beginnings of a major sell-off here. All right, so let's go to the weekly chart of pound Aussie to give you an idea of exactly what we're looking at. You can see that we've mounted a very significant rally from 143.79. That was back in April of this year. All right, the major support level is going to be basically a retest of this trend line here. We have 1, 2, 3, 4 touches, and then a breakout. Very powerful breakout here, suggesting we had stopped sitting above here, suggesting that the market treats this level as significant. All right, that retest is going to come in at about 158, so that's about 1,100 pips lower than where we are right now. So if we start to see some significant improvement in the Australian dollar, that could be from hawkish minutes from the RBA. I think personally that we've seen the end of RBA cuts. I don't know if the market has quite agreed with me yet, and if we start to see some evidence that that is the case, that'll boost the Aussie. If we see strong Chinese GDP figures, that'll really boost the Aussie. So we could start to see the beginning of some significant Aussie strength this week, and if we do, watch pound Aussie very carefully. There are some great potential shorts on that pair, especially once we manage to get below this 168 figure, all right? So watch pound Aussie very carefully. All right. Any specific pairs that you guys want me to cover before I continue? Euro CAD. All right, I don't take a look at Euro CAD nearly as much as I should probably. All right, so let's take a look at Euro CAD. All right, so Euro CAD. Speaking of potential reversals, Jesus, what a gap. All right, so we gapped up 0.25%, which is pretty significant. But look at this daily candle on Friday. That is a hell of a reversal candle, if you'll forgive my language. We poked briefly above 141, and bears basically said hell no, and drove price all the way back down to 140. On Friday, the problem I have with this is we had some Canadian employment data on Friday, which sparked a lot of Canadian dollar strength, and I don't think it should have. The unemployment rate unexpectedly dropped, which got a lot of people to start buying the Canadian dollar. But the reason that it dropped is, again, a drop in the participation rate, which means the unemployment rate is lower because fewer people are trying to look for a job. And for the most part, that means people are discouraged about labor conditions. Canada created fewer than expected jobs and reported the lowest youth participation rate, I think, since like 2008. So not particularly great news on that job front, and we saw the Canadian dollar get bid anyway. So I'm a little cautious about this, but as long as we remain below this resistance trend line here, it looks good. If we get back up to 141, I'd be looking to probably buy Euro CAD. But right now, the play would have to be to short it with stops above this massive reversal candle, and you'd be looking for a move back down towards about 139 or so. While we're on the Canadian dollar, let's drop to dollar CAD. All right, dollar CAD sitting at a very nice support area here, gapped higher, just under 0.1%. All right, so this is the soft support area, right near the 38.2% fit, gapped higher. I like dollar CAD to the upside. All right, but we do have to contend with a significant trendline resistance, retest resistance at about 104.40. All right, so watch that very carefully. CAD's catching a bid here early. We'll see how long that lasts for. While we're here, might as well continue on with the CAD. Pound CAD, all right, again, gapping higher after that sell-off. We've held this. Here's the weekly chart of Pound CAD. It's the only relevant chart, really. We've held this line, all right? After this huge reversal candle, we've held this top. Let's go to the monthly so you can see why that's actually relevant. Sorry. All right, we've held this surprisingly well. I'll be very curious to see how the October monthly candle closes. If we manage to close the candle in anything above basically 165.50, it'll look pretty aggressively bullish on Pound CAD. So that is definitely one that you want to keep your eye on. All right, let's go to Kiwi CAD and Aussie CAD. Monthly charts aren't going to help us here. Check down to the daily. Yep, okay, that's a monstrous bearish candle here on the daily chart on Kiwi CAD on Friday. Still kind of kicking above that, let's go to 4 hour. Still kicking on that trend line break, though. It's not a great setup because there's a lot of chop here. I'd be a little bit hesitant to short, to redraw this line. I would probably draw this line like this. All right, if we get below there, I'll feel a lot better about shorting Kiwi CAD. But for right now, I don't really particularly like shorting it. Aussie CAD, all right, I feel kind of the same way. We're still trading in this channel. We broke down out of this trend line, and then we kind of rallied back above it, and we dropped back below it. This is the 50-period EMA on the 4-hour chart, but for me, Aussie CAD, I've been lost on for a while. It's just trading in this channel, all right? And as long as it's in that channel, I'm not going to touch it. But if we do see a breakdown below this channel, I'll be very much eager to short it. You can see here Friday's reversal candle, actually very nice on Aussie CAD. Bearish engulfing, no, not quite bearish engulfing, but strong daily bearish candle, just retreating from that 200-day EMA. So that Aussie CAD short I prefer vastly to the Kiwi CAD short. But again, remember what I was just talking about, extensive Aussie data this week, and then with the Canadian data, I think people are going to start to rethink how they feel about that this week, and we may see the CAD weaken. So I would be cautious with Canadian dollar crosses this week. Yeah, I think that's, I mean, Jason, you know I don't do Elliott waves, or you probably do, but I see what you're saying. Yeah, exactly. I don't particularly care for Elliott wave, but I agree with what you're seeing on that count. I think that's very possible. I'm going to stick to this channel and see what happens. But like I said, if you're going to short Aussie CAD or Kiwi CAD, short Aussie CAD. It's a lot cleaner right now. All right. What else you got? Any other requests? I have a couple more that I'm going to run through. Nope, I can do Aussie Swiss. Oops. Aussie Swiss is probably going to have been gapped lower. Man, I just don't like Aussie Swiss. We're going to do dollar Swiss in a minute. That one I think is clear. A lot clearer anyway. Let's do fib retracement. Alright, so we kind of danced right around this 50% fib before moving higher. That's positive, I think, for Aussie Swiss. It really needs to clear these highs before I feel happy about it. It's about 87. If we get above 87, I'll start to like Aussie Swiss a lot more. But right now, I think it's just going to chop for a little bit before we see, again, a move either way. And this could be the week that starts that move. Because, again, with all of the data that we have coming out, for Australia, that could be the start. But again, I like it if we can get above this 100-day EMA and these previous highs. It's about 87. And other than that, I don't really particularly want to touch it. This also worth considering. All right. So if we can get above that trend line, that could be your clue to front run the breakout a little bit by getting above that trend line. I am generally bearish the Swiss franc based on dollar Swiss. All right, I like dollar Swiss very much. I still think we're going to see a breakout above 91.40 and head higher to retest this, to test this trend line up here. We saw a pretty significant gap lower here on dollar Swiss, so that is definitely worth paying attention to here at the open. We go down to the 4-hour chart. All right, it's a little head and shoulders breakout that we're now kind of building a larger head and shoulders here, with this particular horizontal line being the new neckline. All right, so that's an area that you want to keep your eye on. Let's look at some of the other yen crosses. Let's look at Kiwi yen. Another breakout here. If you can get a retest down to about 81, it looks pretty good bonds. Euro yen. Breakout 134 is the resistance level to watch. If we consolidate under here, that could be a nice breakout move higher for a move up towards 136. Most of the yen crosses look pretty bullish here. I don't think they're faking. I do think we're likely to see the yen move higher. Again, the one thing that could ruin that would be the U.S. political situation. We'll have to sort of play that one by ear. All right, Aussie Swiss on 2-hour, not a time frame used very often. Intraday, 5 days, 2 hours. Intraday, 30 days. Gosh darn it. Okay, let's delete all drawings. Well, the first thing I see is that we gapped below there, so that's worth noting. How are you? Yeah, I would call that a rising wedge. I'm not super keen on it. I like trading rising wedges when they're pushing into new highs. All right, just because that's supposed to be more of a reversal pattern. I mean, certainly I would still trade a breakdown here. I'm just a little less enthused by it. I would love it if we had the rising wedge up like at around like 89. I like seeing rising wedges when we're pushing into new recent highs. The fact that we're still below highs on the 2-hour charts makes me a little less keen on Aussie Swiss. So I have to say, this gap here with this 50-period EMA, well, this is the 100 EMA, hourly EMA, basically. And this retest, that's not a decent, not a bad short trade. I never buy the Swiss franc. It's a rule I have. Because the SNB doesn't like when you buy the Swiss franc, so I just have no desire to be on the opposite side of a national bank on any trade. I always prefer to buy Swiss crosses, which means shorting the franc. But this is a decent one. The unfilled gap worries me as well, but certainly the support or the resistance level right here is pretty nice. All right, let's look at USD SEK. All right, Swedish krona. Still pretty decent levels here. All right, same as it was. I think we're retesting this. I think we had higher. As long as we stay above 6.45, I like it. So that's another one to keep your eye on for. Let's real quick, for you guys who like these, we'll do gold and silver. Gold holding this rising wedge. If we do manage to get above 1320, we could see a small squeeze higher, though I remain bearish. Gold, oil, all right, kind of the same thing. Above 104, could see a squeeze higher, though I'm a little bit hesitant. If I traded oil, which I don't, I would love to buy it at between 98 and 99.20. Right, in that range. Until we get down there, I wouldn't really have a great interest in trading oil, even if I did trade it. All right. Other questions, requests, pairs that I missed that you would like me to take a look at? I think I got all of the majors. Anything? Aussie Kiwi, sure. I hate this pair. Okay, Aussie Kiwi. 4-hour chart. Broke down here out of this wedge. Again, like the previous wedge, it is an ascending wedge. I don't love it as much because we're not at new highs. But we did break down on this one. We did retest, and Jesus Christ, what's going on with this candle here? Gapped lower, seriously lower, and we've since reversed most of it. Probably some low liquidity. This pair is a disaster in low liquidity periods, which this is. Major resistance, 113.90. Next support, really, if we continue lower, is this 120 area. All right, these previous lows. But God, with this candle, I have no desire to touch Aussie Kiwi until ever. I don't trade it. But that's how I see it. It still looks bearish to me. Wait for a gap fill, maybe, if you want to try shorting it again, but certainly wait for some better liquidity. All right. Any other requests? Let's see what's sparking this. Is this Aussie dollar moving higher? Not really. So is it Kiwi moving lower? Yeah, I guess Kiwi kind of remaining static while Aussie manages to push a little bit higher is helping Aussie Kiwi, but that pair is a disaster. Same rules, by the way, with all the Chinese and Australian data we have this week. Just be careful about Aussie crosses, especially Aussie Kiwi, which is a nightmare in liquidity situations. We also have New Zealand inflation numbers out. That's out like Wednesday at 5 p.m. Eastern time, so like right as U.S. markets are closed. It's the worst time for liquidity, and New Zealand always releases significant economic data, causing just disastrous reactions because of the liquidity problem. So just be aware of that. Find that in your calendar. Make sure it's Wednesday, and just be aware that that's a thing that's going to happen. So the U.S. stock markets are open, so liquidity won't be that bad. Bond markets will be closed, so that's I mean, a little bit limited. I wouldn't take tomorrow off because if we do get some sort of political deal, you want to be around for it. But I would keep it light and not get overly aggressive tomorrow. I mean, if we see, you'll be able to tell pretty early into the. I mean, the European sessions should still be fine because they don't have a holiday, and with the U.S. stock markets being open, they don't really have an excuse to take off. So still should be pretty decent tomorrow. The U.S. session will probably be a little bit more dead than usual, but it shouldn't be anything dramatic. All right, any other questions or requests? All right, thank you guys very much. Thanks for spending the time to join me. My favorite pair this week, dollar Swiss or pound dollar, both dollar bullish. I also like Kiwi dollar right now very much, dollar bearish. So there's your split. If you think the dollar is going to do good this week, look at pound and Swiss. If you think the dollar is going to do bad this week, look at Kiwi. Or hedge it and see what happens. All right, good luck, guys. I will post the recording as soon as I'm able to. It probably won't be till late tonight or early tomorrow. But as always, I'll talk to you. I'll be available on Twitter. So thank you very much for joining me. I look forward to talking to you soon. Enjoy what's left of your weekend, and good luck trading this week.